Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new week. Hope you guys have all had a great weekend. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, as we can see, Bitcoin smack bang pretty much in the middle of this range with an upside of about 23,500 and the downside of roughly 20,000. You see, that is where we are, almost smack bang in the middle. We could pretty much might as well draw another horizontal here, seeing as it seems to be a pretty important level. Obviously, crypto in a very bearish trend, very difficult times. However, we are trying our best to stop going down, most notably being dragged up by obviously what's happening with the S&P. It has managed to hold at present this very important support level that I have highlighted a few times. If you want to kind of look at where it is an important support level. If we come below here, then we are looking at levels considerably lower. So I feel like this has to hold. But on the flip side, just more generally speaking, there is a distinct possibility in the longer term macro that we're in a sort of a 2007 period where ultimately we'll go into a 2008 market crash. But again, these are longer time frame moves. So we can get significant bounces in the meantime before ultimately significant crashes come in. But yeah, that is enough of talking about crashes. We'll just extend this along here. So realistically, if the S&P stays bullish, however, it being at resistance at the moment, we'll look at in a sec. Then yeah, we can see this potentially come up and test this resistance. Getting above here would actually be. Well, it would be massively bullish for the short and probably medium term. You can probably just tell my bias in my voice that it's such a big it will be such a big effort, a big ask for it to get above here. But if it does, obviously opens up mid to high 20,000s, and then you never know what's going to happen. You never really know what's going to happen. I mean, people like to say things are different this time and then get ridiculed because things are never different. But what I would say, looking at macro markets, is that the system is a lot more indebted this time. There's a lot more implications where literally Finance 1.0 could potentially completely just evaporate in the next major pullback. So maybe they just don't want to push it that far. Maybe this is a lows, and this would be a big call because they're pretty much the consensus within almost every Finance 1.0 participant that I listen to, that this is nowhere near the lows, and we're definitely seeing lower. And obviously when everyone is that way, the market will go the other way, even if it's just temporarily. Even if, like I said, it's into like next year, and then this is 2007, next year is 2008, and then that's when we get the big crash from, maybe even from new all-time highs. Maybe, who knows? We make new all-time highs and then we crash and we have an absolute massive debacle. Who knows? But at the moment, yeah, like I said, I want to just highlight the fact that S&P is approaching resistance here. If we just extend this along a bit, you can see where these levels well, we have to go back quite a way, but we can see where these levels come in from. But yeah, S&P at resistance, it gets above here, and then it's got a chance of taking this out. Take this out, I mean, literally, like I said, we could get that Ludwig von Mises crack up boom. Not mentioned that for a while. We could basically get that move up to literally new all-time highs, and then we potentially get a big massive collapse. But hey, let's not get ahead of ourselves. S&P got to basically break above here and then continue upwards. Could very easily get rejected here, come back down, take out this low, and then literal goblin town, Finance 1.0 goblin town. 10-year though is obviously easing off here. This clearly was the line in the sand. I always thought it was 2.5. Well, I say always, for a long time when we were a lot lower, I always thought 2.5 would be a pretty disgraceful level for it to get to, just being able to afford the debt wise. 3.5 was clearly what the ultimate line in the sand was. If we go above 3.5, now that we know this is where they've decided to intervene, the euro intervened, Japan is literally teetering on the edge of not being able to pin down global bond yields anymore, and then obviously the US, well, intervened in its bond markets. You can see this is a level. So if we end up with the force, momentum, the whatever drives in the market to break above 3.5% in the yield, that'll be it. That will be it. That will be the point where we get basically probably a spike above there, and we'll get the crash in the stock market basically if that is to happen. So that is not to say that has to happen. This is obviously a concern and a concern obviously. However, if global bond yields are going to ease off, it will release the tension. Obviously, it will release some of the pressure of how much intervention Japan is going to have to do to pin that yield in their 10-year. Mortgage rates obviously wrecked, approaching 6%. Oil, we'll just go back to a 4-hour. Is oil gonna break back above this level, just be a swing fail and continue upwards, or is this back testing this level and we are going to come down lower? Remember, like we were saying, everybody is long this. Everyone's long this. Everyone's expecting markets. Everyone's expecting considerably lower lows in markets, considerably higher highs in this. I mean, is it going to be that simple? Are all the finance fund managers that are literally your position for that exact scenario, are they all going to win? Is that how it's going to play out? You can probably sense a large slice of skepticism in my tone there, but hey, we'll see. At least Russia's doing all right, 18, well, not 18 here against the dollar. So yeah, DXY, how is that doing? Have we put in the high for this temporarily? What I will say is some finance 1.0 analysis analysts that I respect very highly are looking for considerable weakening in the dollar on what I think is a very credible basis. That basis being capital flows. Capital flows ultimately are what drives everything. What has been going on is that in this whole push up in stocks, risk assets, and predominantly American stocks, America has stimulated the most obviously on an absolute basis compared to any point in the past, and also on a relative basis compared to any other country in the world, purely on the basis it was able to do that because it has world reserve currency status. So the US has experienced massive capital inflows. Obviously kept the dollar strong, kept the dollar going, done whatever it's done to the dollar in that meantime, and those flows are potentially now going to start leaving dollar assets, leaving the dollar basically, leaving the dollar, however, in whatever form of asset they are in America, in dollar value. They are going to start exiting that, and those dollars are going to exit, especially if we do see a more difficult time globally. So as difficult as it may be for just basic understandings of how markets work, i.e. just bad times, dollar will go up, we could end up with a reversal of that flow because we've had massive historic capital inflows into the US over many years now. That could be a massive drawdown in the dollar, and like I've said, some very respectable analysts are predicting that exact thing, literally based on capital flows. So yeah, and they are basically thinking towards the end of this year, September time into next year, the dollar is going to actually see severe depreciation. Well, obviously against with DXY again. So I mean, currencies is always relative trade. So yes, let's see. They are also predicting obviously emerging markets and obviously currencies that obviously commodity currencies, because commodities should do good in a dollar environment that is weakening. So yeah, I mean, and then also emerging markets tend to do better in that environment anyway, regardless of the fact whether they are commodity producers or not. So yeah, one to keep an eye on. Let's look at Ethereum Satoshi pairing. back above this resistance, which is good to see. This was pretty, it was a pretty disgusting level for us to be below, if as you can see here. However, what I will say, we were getting a lot of forced liquidations, so yes, that gave us momentum to break below there. Things have somewhat calmed down now. I think we are through the most of the, obviously the big liquidations for Ethereum, DeFi, all those sorts of things. The major ones are done. A lot of the fear is going to start to price out. The fear of future ones is pricing out, and obviously the move down and that people are going to tentatively step in, which is what is happening. So I think this is I think this could potentially be a swing failure below here. We're back above, and then we will continue to grind our way back up to the top of this range, somewhere up here. Obviously, that's gonna need a relatively stable environment for crypto. So Bitcoin doesn't necessarily need to go up lows for it to do that. It just has to kind of stabilize. The Ethereum USD pairing, again making significant moves off its lows. Again, like I was saying, liquidity concerns. All that fun stuff is was kind of what drove us so low so quickly, and if we are to establish price action above, basically above around this 1860 level area, 1860ish, then yeah, I do think then we put all that, then yeah, I mean we can continue onwards and upwards. We'll have the merge come in. That merge, obviously a lot of people think it's a bit of a meme. Some Bitcoin maximalists that I know are just like, oh, is it even happening? It's not even going to happen. So yeah, a lot of fear, uncertainty and doubt about the merge, but it's coming, and it's coming most likely in September. Dynamics will change. I mean, like I said, a lot of people just think it won't come, won't get shipped, and obviously, so when it does arrive, it may not be a buy the rumor, sell the fact. It may be a sell the rumor, buy the fact. Well, we've certainly been selling anyway, but obviously crypto's been weak, generally speaking. So yeah, Bitcoin dominance, interestingly, in the context of what is going on, making a decent move down. So yeah, I mean, there you go. I mean, obviously a lot of this was driven up because it was a lot of ETH-based DeFi concerns, not so much Bitcoin. And yeah, so maybe this will turn back up, but yeah, we do manage to stabilize here. Like I said, even if like we are in 2007 and equivalent, 2008 will be literally the massive collapse. That's a couple of careers in between now and then, that we could even get new all-time highs. I mean, we saw it in Bitcoin. The bear market in Bitcoin quite possibly started here, but we were driven up basically by what is in hindsight widely accepted to be the ETS buying up basically Bitcoin to then obviously then launch. So this was potentially the top. We got bought up then, and then we continued down. But yeah, I mean really, I know that was a technical factor, but kind of what I'm saying is we could have obviously have a high, and we could take that high out and then come crashing down into next year. Who knows? We expect a lot of stimulus anyway. Expect a lot of all that fun stuff. I mean, they've just got, as soon as inflation starts to come down a bit, we are going to have one of the biggest pivots in basically hawkishness or dovishness from the Fed, and I can assure you, in those environments, risk assets, particularly crypto, are gonna go nuts. So yes, what else do we want to look at? Not much. Let's look at Shiftcoin. Shiftcoin, there or thereabouts. Not doing a lot. The shift silver ratio. Yeah, been climbing pretty nicely there, realistically. Big blow off when Tone Vays literally bullish at the top, if any of us remember, 2 years ago now. Wow, time flies, doesn't it? I feel like it was yesterday. And then yeah, all the way down. But yeah, now we're having like a nice bounce. Is this just a resumption of this upward trend, or is it gonna basically come down? Ultimately, if we are, I mean, gold is potentially losing its monetary premium, but obviously industrial demand might be down for silver, and obviously silver's lost pretty much its monetary premium. So yeah, it's a difficult. There's lots of variables. There's variables in that are difficult to really account for. Yeah, that's it. Not much else to look at on there. Let's have a look at some good old Bitcoin stochastics. We want some medium to longer term ones to be indicating a nice potential bounce. Obviously not got that in the 4 hour, but that's not realistically what we are looking for at the moment, to see a move into the deep 20s, a potential to try and break above that 23,500. Yeah, 12-hour toppy though at the moment, 10-hour toppy. Daily though looking brilliant with a long way to go. 2-day well, turning up from a low level, so could get us going. 3-day looking to turn up from a low level also. 5-day still coming down though. Weekly still down. Bi-weekly very low as well, so, and then monthly diving still. So we could, whilst we're not there yet, if we can stabilize around here for maybe a few more weeks, these will be turning up and we will be having what could look like a nice bounce. Well, realistically, the best case we can hope for at the moment is up towards is up towards 30,000. And yeah, that would be pretty significant. So yeah, and then we'll just have to then obviously reassess the situation then. So yes, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.